Chang. She is a China economist at Barclays Capital. Thanks for coming in. Okay, well, no surprises really expected here. We do have the undercurrent, of course, of a new leadership in the wings, so you don't want to really rock the boat.
Yeah, I think this is a year, obviously, of the leadership transition, and it's also the last year of the current who and when administration. So stability would be a key for the year.
That's what they want. So anything specific, I guess it's going to be a reiteration of some of the goals that they've had before. I guess they'll be talking about, well, the economic policy shifting towards the domestic side of things.
Yeah, absolutely. So I think in the near term, to stabilize growth, to avoid, to ensure a soft landing of the economy will be a key. But the government also needs to push forward for the structural reforms to rebalance the economy and to reduce income disparities. And these are the key things that concerns the general public and also the observers of the Chinese economy. So realistically speaking, we do look for some reforms to happen. For example, in the resource price liberalization, energy, water price, and electricity price, and also on tax reforms, for example, extending the property tax into more cities, and also the VAT tax reform to expand from Shanghai into nationwide possibly, and also some other possible controversial topics allow private entry into the key strategic areas.
Yeah, they want to get the private sector more involved and perhaps take up some of the room the state-controlled enterprises have not been operating as much. And but the underlining all this is trying to keep the people happy, isn't it?
Yes, as government has already clearly made in the 12th five-year plan, improving people's livelihood, and to either through improving income distribution, and to allow minimum wage, and also to expanding the social safety net coverage, and these are the key things I think the government needs to
put in place.
Forward.
Yeah.
Yes.
Of course, growth is going to be one of the top objectives here as well. And we are expecting a slight slowdown. And people talk about these different landings, but it's just a slight slowdown, isn't it, really?
Yes, we continue to look for a soft landing scenario in China and also around 8% of the growth. The government probably is comfortable with, say, 8.5%, given last year was 9.2%. So even though the target set this year will be likely 7.5%, that would be just in line with the 7% set in the 12th five-year plan. And also we know that the Chinese economy is entering into a period of lower potential growth, given the slowing down in the external demand and also domestically the rising cost of production.
Jian, I just want to talk about what is next. What does the People's Bank of China do when it comes to, perhaps loosening monetary policy more? Because we do have this higher oil price. That does, of course, create a new inflation threat to the country. How concerned and how closely are they watching that?
Yeah, definitely. Last time when I was here, I was highlighting upside risk to inflation remain. Externally, we have the rising commodity oil prices. Domestically, we have rising wage inflation. So the PBOC will continue to keep this at the back of their mind. But on the other hand, we know that domestically, also the downside risk to growth have been clear. Property correction, the government has been persistent on the property tightening. Also externally, uncertainties remain. So PBOC will likely to be under greater pressure, even if they wanted to ease at a more measured pace, but they will probably ease a bit more.
Do you think they will? Because I think that a lot of people sitting where you have been saying that they'll start to perhaps relax monetary policy more when we get inflation down to about 3%, and they're penciling in perhaps May, June for that. Now, what about you?
Yeah, we have actually been using a word, cautious easing policy stance from both the PBOC and the government, given what we talk about the inflation and the growth mix picture. We do expect PBOC to lean on the easing side, given the growth is moderating, is slowing, and the inflation is moderating. But it's probably more, like I mentioned, at a measured pace. So we do look for 2 to 3 more triple R cuts, but no interest rate cuts, given we are still in the relatively negative real interest rate situation.
Jian, thank you so much for coming in. Jian Chang there from Barclays Capital.